Welcome back to Big Picture Investing. I'm Kevin McCormick, and today we're jumping into what I consider to be the most important AI stock not named NVIDIA, and that is Coherent. They are key to the data center build out across the world, and they just reported some good, but not out of this world earnings. But the key point here is what they reported and discussed on the earnings call was very important. So let's jump into the numbers. They reported $1.58 billion in revenue for Q1. This is up 17% year over year and exceeded analyst expectations. And it was just above the range they gave us last quarter. The earnings beat is a big story here, up 73% year over year, $1.16 EPS. And the stock didn't move much at first on the earnings announcement, but this was a classic. Don't trade it until you hear the conference call stock, because as the conference call went up, this stock just kept moving up in after hours, and it finished up the night well up over 10%. And that's after it moved up 7% today before the earnings were released. So let's dive into why this stock has moved up so much and what everyone else was missing. Most important on the call, well, not most important, but what is always important on these calls is the guidance. And Q2 guidance is strong, but it was the guidance they provide us that we'll discuss later about the next 12 to 24 months of visibility they have. But for Q2, they're looking for about 20% revenue growth. I'm betting they'll hit that 1.7 billion or better number. This is a classic under promise, over deliver company. The CEO here knows what they are doing. Gross margins are going to start pushing up towards 40%. They have a target of raising their gross margins to 42%. This was a plan they put in when the new CEO came in about 5 quarters ago, and they have been moving aggressively towards that. That's why you're seeing earnings outpace revenue growth for this stock. Non-GAAP EPS is going to be between $1.10 and $1.30. As I mentioned before, I bet you that comes in a lot closer to $1.30. Important piece here is the all-important data center and communications is continuing to see great growth. Data center is expected to grow 10% sequentially. That's quarter over quarter, folks. They actually mentioned in Q1 they could have done more in data center revenue, but they were supply constrained on their indium phosphide. And we'll be talking about that more in a few minutes. So we've got great guidance for Q2. Now let's dive deeper into what is driving Coherent. The revenue growth trajectory is terrific with this company. They've gone from a industrial company that also had a bit of a network kicker to now the majority of their business is attached to the AI data center build out, and they are key supplier and the best supplier in the industry on the key networking components that everyone needs. The data center connectivity group grew 25% year over year. Communication infrastructure is going up as well. And the nice kicker here for everybody is industrial applications have started to see an increase. It was that legacy business of telco and an industry that was flat to down for the last 12 to 18 months. It's kind of the anchor holding back the stock, but they've actually seen growth coming in that area as well. So as I mentioned before, the margin expansion story is huge here. They're looking to get to over 42%. They're at 38.7 today. There's a couple key drivers that we'll be discussing here. They've been selling off low-performing business units and moving them forward. So let's dive deeper into what that means. CFO did a great job of really summing up the great work she's done over the last year. They sold a business unit last quarter, received $400 million for that space unit. They immediately paid down debt. They have now improved their leverage ratio from 2.4 a year ago to 1.7 today. Their better balance sheet allowed them to refinance debt, increase their revolving credit to $700 million, and that interest financing saved them 60 basis points. All of this is accretive to earnings. Every one of these transactions has helped. I've been a little frustrated over the last 12 months because the street and analysts weren't giving them credit for the revenue that was being lost when they sold off these business units. But now we're starting to lap some of these numbers and we're seeing some really great growth. And especially, as I mentioned earlier, the real acceleration is coming in that profit line. So let's jump into the most important area. That's the data center and communications, the AI data center growth area. It is now 69% of Q1 revenue. I remember when I started covering this company, it wasn't even the majority of their business. This demand, to put it simply, is unprecedented. And this is really where the executive team hit home on the earnings call and we saw the stock start to go up. We got decent Q2 earnings, but it wasn't out of this world compared to some of the other people that have reported. But they now have visibility and forecasts from their major customers through 2028. They have orders booked for the next 12 months. So that gives them great visibility into their sales pipeline so they can go out and aggressively invest in additional production in that very important area that we'll discuss here in a few minutes that they need to make these data transceivers and power these data centers. That indium phosphide is what I'm talking about, and it is the laser that drives everything. It is in supply constraint right now, but they are looking to double their capacity over the next 12 months. More on that in a few minutes. 1.6T transceivers. They are the industry leader in this. They are the only one shipping a product today. Luminum on their call just mentioned that they were planning on having revenue in the back half of 2026. They are owning this market right now. They are shipping their product. It is going into AI data centers for the next 6 to 9 months before their nearest competitor will be in production. This is great for Coherent long term because once they become the standard with their transceivers, customers don't want to switch. You could say there isn't going to be much of a difference, but very small changes can cause big headaches for these GPU clusters. And not only are they shipping it, they're shipping 3 different versions depending on customer needs. The other big growth area is the optical circuit switch. This is a part of the market that is still moving forward. They have 7 customers they've shipped their switches to so far, but really, they confirm what others in the market are saying. You're going to see the optical switch business really start to pick up in the back half of 2026. I don't think it's a coincidence that this is aligning with some of those other major new chips coming out from NVIDIA and AMD and the data centers that they are supposed to be going into. I think that's when you're going to see explosive growth in the optical switch market, which is great for us because we can sit here and enjoy the great earnings and revenue that we're having right now, knowing that just 6 months away, there's going to be a nice new business segment that is going to start growing very aggressively. As I was kind of mentioning, this communication segment acceleration, 11% sequential growth quarter over quarter. This is going to keep growing. All the data center builds out you've heard around the world require hyperscaler data center interconnects. This is actually a very important area for them because at first we were just seeing these GPU data centers being just contained within. And as we've mentioned before, they do have diversified growth with their industrial out there. It's not what's driving the stock and the hyper growth, but it is a great business to have, driving OLED and other industrial needs in the market. It's important for you to hear, but also some interesting tidbit of information they gave us is about this AI thermal management. This is becoming a very interesting piece that could have some great upside for us as shareholders. They had this as part of their industrial division where they could move heat twice as effectively as copper with their thermal management. But now, as we all know, Heat is so important to the data centers and being able to remove the heat from the data center that they're seeing opportunities to deploy this technology in the data center as well. Now, this is actually, I think, the most important piece that came out during the call, and that's the strategic capacity expansion of the indium phosphide. This was what was supply constrained last quarter and stopped them from being able to ship as much revenue as they wanted in the data center. I also think it's why we saw a large upside surprise from some of their smaller competitors, because they just had a little bit of supply that they could sell into the market. But this is not going to be the case going forward. They own the first and only 6-inch wafer facility in Sherman, Texas. This just went online in September, and they have done an excellent job of bringing this up to speed. It is already producing and yielding at the same level as the 3-inch production lines that they have had in place for a very long period of time. They can produce 4 times the number of chips at half the cost with this 6-inch production. So this is really going to drive those margins, and this is the area where there was supply constraint. So since they had the success in Sherman, Texas, they're now adding this capacity in Sweden at the same time in parallel. Their goal is to have double the capacity to make this very important piece for the lasers in the next 12 months. That's why when I mentioned earlier that when it's so important that they have POs and visibilities from their customer, they can go out and make investments like this because they know the demand is there 12 months from now, and they need to ramp up capacity. Today, Coherent uses 100% of the capacity they produce. And they also buy from other third parties just to have a diverse supply chain. This is a huge competitive advantage for them because they use every wafer they produce, where there's other people out there in the market who are selling to them and then also trying to compete with Coherent. Huge competitive advantage for them going forward. They're going to have better margins, cost advantage, and production advantages over everyone else in the market. So as I mentioned before, this global expansion is continuing. The Texas fab is already up. They're adding to Sweden, and then they're looking to add capacity as well in Malaysia and Vietnam to meet the demand that they know is coming, because they have the POs and the orders are booked for the next 12 to 18 months with visibility all the way into 2028 right now. So as I mentioned before, this portfolio optimization process that I don't think the street was giving them a lot of credit for has been aggressive, to say the least. They have sold or exited 23 different manufacturing sites. They have sold off multiple business units so they could have the capital needed to invest in the AI data center build out. A great move by the government, not the government, but by the executive team here. And it's really what is going to set us up for even more explosive growth over the next 12 months. All right, let's sum it all up. This was a good quarter from Coherent, great conference call. The good news for investors like me and other folks out there is we did not see a unusual market reaction like we did last quarter from the earnings results. I think Coherent is well positioned to capitalize on the AI data center growth, and this stock still has a lot of space to move forward. Over the weekend, I'll do a technical deep dive into Coherent and a few of the other stocks, so stay tuned for that video. Till then, good luck with your trading.